when you have rising prices in the economy, which is prices for goods and services, that is what they refer to as inflation. That is bullshit. That is not inflation. That is what you would call a symptom of inflation, because the inflation come about in the prices is because the banks and the business people and other businesses and other people that is in the economy doing businesses and doing buying and selling, they know that the feds, when the feds lower interest rate, they make money easy to be accessed, to be borrowed, and to be paid back at such a low rate. So when they borrow the money, guess what they do? They buy their products and their services and they sell it back, and they charge a lot of money for these products and services. That is how you have now the prices for these products and services are reflected in what people pay when you should compare this year prices to next year prices, or the last 5 years to this year. You know that you're paying higher by so many percentage. You know what I mean? That is how it's done. Now, when the prices are rise, the Feds want to shift the blame from itself to the business world in terms of the people that borrow the money and the prices that they sell their products and services for. Okay, so it's a deception. So these are the things which when I do my research, this is what I found out, and this is what other professionals, you know, like Larry Bates and Milton Friedman and other people, you know, will if they be honest, they'll tell you that the inflation, you should not look at it from a rise in prices. You should look at it as a symptom of inflation, because inflation in the real Federal Reserve sense is when the Federal Reserve lower interest rate and it allows them to print more dollars and put that dollar in the economy, which increase the amount of cash in circulation, which reduce the purchasing power of the amount of money in circulation, because eventually the prices of products and services will eventually be risen by those persons that are selling them, you know, and that is how they make more money for themselves. Alright, so it's all about greed, that plays a role. It's all about the love of money, that plays a role, and it's all about an opportunity. Those three things play a role in the business world. Alright, not everybody intend to steal, though they have a business. Not everybody intend to capitalize upon opportunities, though they are presented. You know, but it's just that this is how the world works. The flesh of man is weak. They need to eat, and they need to make sure that that is secured by doing a lot of buying and selling and making themselves rich on a carnal basis in order to get rid of the worries of poverty and what poverty brings, and the shame and the reproach that it can bring to you if you happen to be poor in this life. Alright, so these are the things which these people have worked out in their heads, and this is how they work it out, and they all just one against the other in these things. Alright, so it affects persons who are ignorant, who do not know this is how the game has been played. Alright, and still being played. Alright, so whenever you want to know when the Fed is going to do a market recession or something of that sort, just look in the history of their lowering of the interest rate, which shows you that they're going to come up now with a ease money policy, and they're going to increase the financial asset, the financial circulation of cash in the society, where the banks will come to them to borrow the money, and businesses and individuals also will come to the banks and borrow this money, put them in the economy. And in this way now, these very same corporations that buy products, sell products, manufacture, and other institutions with trade services and schools, you will also see a raise in tuition when rates are low. Okay, good. But watch this now. The Feds now use that as a reason for them to raise rates, to say they are choking off inflation, which they refer to as price inflation. Really and truly, what they're actually doing, they're actually making more money for themselves when they raise the rates, because eventually what it does now, it forces banks and institutions and other people that borrow money to come to them and borrow money from them at a higher rate, which makes the Fed richer, and all those shareholders that are major shareholders in the Federal Reserve System, they are simple private white people that own it. Alright, it's not the government that own it, it's not the American people that own it. There are private interests from Europe that own it. The Rockefellers have shares in it, the Rothschilds have shares in it, the British Crown have shares in it, the Vatican have shares in it, and other families like the Rupert, the Russells, they all have shares in it, and the Oppenheimers and the Schiff's family, they all have shares in it. Alright, so these are the private people that get immense wealth from the people of the country through the political process, which the political process is used as a mediator to transfer wealth from the poor to the rich. Alright, and to also share the middle class of their wealth. So if you win lotto, my friends, alright, I suggest you look on the gold market today and the silver market, and you put actually 80 if not 90% of your money in gold and silver. Alright, because the price of gold and silver will continue to rise as the US dollar lose value. So these are the things that you should know, and anybody should know, should you choose to become rich and stay rich. Alright, I was mentioning something about how you can track when the Federal Reserve is going to put the United States economy into a temporarily declining economic activity. Just look at the changes in their federal funds rate. Alright, and they will always make the rates change over a 4-year to a 5-year period when they began to apply it from say 1% or 1.5% or 1.75%. Then you see go up to 1. Then you will see go up to actually one and you know, they'll probably go up to 1.8, or I think they do it on a 25% basis. 25. I think they raise the increment by 25 basis points. Sometimes they use 50 basis points, you know, and you will see within that, you know, if it's not 5 years, you know, it will probably be somewhere like 4 years or 3 years period. You will see them move from a 1 percentage point to a 5.25 percentage point, even 6 percentage point, even 6.75, even 7%. All right, when they raise rates that high, you know what's going to happen in the economy? What is going to happen in the economy is that persons who had previously borrowed money at a low interest rate, if they had signed it to a ARM, what is going to happen is that the adjustable rate mortgage or the adjustable rate loan, their rate payment is going to be higher, and a lot of persons, if not any or everybody, can't make that payment. So therefore it's gonna force them to default, and the asset that they had put up for collateral to borrow these money are going to be taken over by the banks, and the banks are going to be taken over by the Federal Reserve if they too can pay back the installments when these rates are right. So this is how the Federal Reserve rushing now to lower the interest rates in their favor, and in this way now, before they lower the interest rate, they rush to buy these assets that are selling for pennies on the dollar, because so much asset goes into default that person do not have the money nowadays to buy them. So what the Fed does, and all the people in the secret and in the know does and know, they allow the rates to remain high until they finish buying. Alright, and what they do, they lower the rates after they finish buying these cheap assets for pennies on the dollar, because they force the default to happen by these people that put up these collaterals and had purchased property with the borrowed money as well. And in this way now they can make the payment, so they default, the bank take it back. So what happened now? Another cycle begins. Alright, the rates has been lowered. Now the real puppet masters behind the scene that are pulling the string, now they have a big lump sum for cash. They now can come already buy up a lot of properties for cheap pennies on the dollar. So when rates are lowered by them now, what they do now, they allow these stupid gullible people who are loaned so much to borrow them at cheap now, and then they sell back these cheap assets to them that they had purchased for pennies on the dollar at high markups, and that's how they make rich and make the rich themselves. That is how they do it. Alright, and that is how they do it. So that's how persons learn from this and be wise when you win the lotto, or you're going to college, or do anything with money and have anything to do with the banks or borrowing or lotto money or anything. Just be wise and be astute, you know, and know what they do, study what they do, watch them, okay, and so on and so forth, and be wise as to what they do. Alright, and I will begin to close out this session now, and I hope person learn something. And thank you very much for your cooperation and your watching. Thank you.